How's it going out there? Welcome to Stock Talk with Mike. Today, I want to talk to you about Amazon. Now, I know all of you already know what Amazon does for the most part, but I think the information I'm going to share with you could be really useful if maybe you feel like you've missed out on the massive returns that Amazon's had over the last number of years, and that now is a huge $1.6 trillion company. Maybe you feel like its best days of growth are behind it and you're better off putting new capital to work elsewhere. But also, if you've been a long-term shareholder, I think it's important to continue with any company. It's important to continue to evaluate what their future prospects are, regardless of its past performance. So today, I'm going to talk to you about how I can see Amazon easily hitting a $10,000 per share price target within the next 5 years. And with the two massive growth drivers I'm going to talk to you about today, I think it could get there quite handily. Now, one of those has been talked about in the media and by analysts quite a bit. And the other one I feel like has been massively underreported and I feel like is equally as big of an opportunity. So stay tuned. All right, before I get into future revenue drivers, I just want to give a quick overview of Amazon's different revenue streams. So they make about $350 billion in revenue annually right now. And 163 billion of that is from their online stores. And then 63 billion also comes from third-party selling. So if you combine those two, e-commerce is making up about 220 billion or over 70% of their revenue right now. And in the United States, 50% of e-commerce is through Amazon. So pretty remarkable stuff. And it's still growing pretty quickly, especially this year with the pandemic. E-commerce was up over 40% year over year. Amazon Web Services bringing in about 40 billion. That's up from about 30 billion last year. So it's growing at about 33% clip currently. So it is getting up there, but interestingly, Amazon just had their AWS reInvent conference back in December. And AWS CEO Andy Jassy went on to say that they're far from the peak with Amazon Web Services because they've been getting some questions about revenue growth slowing down, or is it going to slow down? And he thinks there's a long runway ahead of them for cloud. And, within that cloud division, there's probably 15 different development stage companies you could tease out of what Amazon's involved with that I'm not going to get into today, but they're just involved in so many remarkable things. But he went on to say that $3.6 trillion IT spend globally, that 96% of it is yet to move to the cloud. And just that runway is still massive. I think even in the United States, I think the cloud is less than 15% of workloads still right now. So there's lots of room for AWS to run as well. Looking further, they also have some other smaller revenue streams. Credit cards, about 5% of their business, or 17 billion. Their physical stores, so I think Whole Foods, about 17 billion or 5.3% of their revenue. And then their subscription services, Amazon Prime, Prime Video, about 22 billion annually. All right, the first massive growth driver for the next 5 years I'm going to talk about most likely won't come as a big surprise for a number of you, and that's Amazon Pharmacy. They first announced back in November of 2020, releasing in North America, but they've also registered in Australia, Singapore, Latin America, and India as well. But the pharmaceutical industry, of course, is just massive. And actually, US market alone makes up 40% of pharmaceutical spending globally. But globally, the pharmaceutical industry is expected to eclipse $1 trillion in the next 5 years. And about 200 billion of that is expected to be e-pharmacy, so right in Amazon's wheelhouse. And keep in mind, they're coming from a revenue base of $0 here, right? This is brand new for them. Since they have first acquired PillPack, I think back in 2018, they've been working on this pharmacy model. So reading the presser here, basically by signing up and being a Prime member, so hopefully this might be a bit of a driver, a revenue generator through Prime sales, membership sales as well. As we know, Prime members do spend about double that of non-Prime members, but the Prime market is getting quite saturated. I think over 50% of Americans already have Prime memberships, so I don't expect that rate to go up. very substantial very quickly. But reading it here, members save up to 80% on generics and 40% off brand name medications when paying without insurance. They also get deals without insurance at over 50,000 brick and mortar pharmacies as well. And I think just this with their expertise in logistics, I just think this could be a really high margin business for them. Pills are lightweight, small, compact, easy to ship. I just think this is a no-brainer for Amazon. And interestingly, an interesting component here is their digital pharmacist as well. So members also have 24/7 phone access to customer care pharmacist as well. So a pretty interesting component there. But I just thinking about this industry, and I'm going to break down the numbers later, but we're talking about a $1 trillion industry in the next 5 years. If Amazon can, and Amazon's really is a global business at this point, if they can tap into even 10% of that, if it's not 5 years, then, eventually, that could be a massive revenue driver for them. I want to get into another revenue stream that I don't think is talked about a lot, but Amazon's been dumping a lot of money into as they're anticipating it being a big driver for the next leg of growth. All right, the other massive growth driver for Amazon for the next 5 years I want to talk to you about is international markets, or specifically India. So there's a bit of a land grab going on right now. Big tech is investing massive dollars into India, as I think everyone recognizes it's just totally primed for growth right now. Amazon, Facebook, and Google collectively have invested about $22 billion in 2020 for Amazon, building out their fulfillment centers. They now have over 60 fulfillment centers already in India, and they're also building out their AWS infrastructure. Cloud computing in India is expected to grow to about $7 billion in the next 5 years or so. But I just found this article here from Gene Munster, a common CNBC contributor, he said that India alone could contribute up to 20% of Amazon's growth in the next 5 years. So right now, they're already in India, and they're a major player as far as e-commerce, but it's still small. But India makes up about 3% of Amazon's revenue currently. So they're expecting potentially some massive growth here. But I should mention, one thing that gets underreported too is that global markets for e-commerce for Amazon is now making up about 40% of their e-commerce revenue. But there are other established markets that they're in already, like Germany, the UK, and Japan. But now Amazon's moving heavily into other emerging markets, like India, I think is the big one, but also Singapore and Latin America as well. So it'll be really interesting to see how this plays out. Bezos also said, with China, where they kind of failed at rolling out e-commerce, is that they weren't aggressive enough, and that they're going to be a lot more aggressive in India. And we're seeing that play out right now. All right, so India has a 1.3 billion population, and it's actually the fastest growing economy in the world. And being a democratic society, Amazon doesn't have a lot of the issues to face that they did dealing with China. And looking at their connectivity, internet usage, India had 687 million people connected to the internet in 2020. By 2025, that's expected to grow to 1,047 million. So obviously they're coming online incredibly quickly. And just looking at their e-commerce industry, Amazon's already a leader there, even though it's a fairly small market. But they have about a 30% share of the market, neck and neck with Flipkart, which is owned by Walmart, actually. But currently, it's about a $64 billion industry, and it's expected to grow to about a $200 billion industry by 2027. So Amazon is the highest ranked e-commerce player on a lot of different polls by a lot of different standards in India. You could see their market share obviously continue to grow. And if they could get that to about 50%, you could certainly see by how you could get into about $100 billion in revenue from India rather quickly. Also, the cloud side of things is growing, could be $10 billion industry by then, and Amazon could have a large share of that as well. Interesting, I was actually trying to get a sense of Amazon versus Walmart or Flipkart in India. right around the same, about 30% market share. But I looked at some website analytics from the last 6 months just to see if I get any sense of any shift there. And it's quite interesting, actually. So looking at the top line here, total visits to Amazon's webpage, 295.5 million versus Flipkart, just 190. Visit duration, 5 minutes, 21 seconds versus 5 minutes, 6 seconds. Pages per visit was 7 for Amazon, 6 point something for Flipkart. The bottom, you can see the 6-month trend, just generally tracking very similar month to month over the 6 months, but generally just higher for Amazon. So I found that interesting, given that historical sites had Amazon last year or two had actually Walmart quite a little bit ahead. And it seems like there's a bit of a shift that it seems like newer updated websites had Amazon as the leader by a smidge. And now looking at the last 6 months, internet usage, website usage, consumption, it looks like Amazon is currently the leader. So it looks like Amazon's gaining market share, and I think is going to emerge as a leader in India. A couple other interesting things about the market is still only 6% of adults in India have credit cards. So they're really relying on the importance of digital wallets like Amazon Pay, just like a number of other emerging markets with e-commerce. But that's working quite well for them. But that's actually growing at a 50% rate as well. So just kind of crazy, like looking at these numbers and how quickly things are changing. They also have, Amazon has about 10 million Prime memberships in India. And it's interesting, like obviously it's important to get people into that ecosystem. So they're using their e-commerce platform, but just a very different approach in India. The focus there is really around sports viewing rights. So Amazon actually has acquired some cricket viewing rights, but the real leader there actually for cricket in India now is Disney, but Amazon is actively trying to buy up viewing rights as well. All right, here's how I get at a $10,000 price target for Amazon based on these growth drivers and just looking at past trends with Amazon. So you can see here in blue, I plugged in, so I used the Q3 and made some estimates for Q4 for the end of 2020, just as my cost basis here. So for revenue, we have just over 356 billion and expenses coming in at 337 billion. Giving us a net income of about $19 billion, which is a net profit margin of 5.4%. And it's trading currently at a PE then of about 84.6. Here at the revenue breakdown, for online stores, I've used a growth rate of I've used a growth rate of 20%. It actually was about 40% in Q3 of 2020. But looking at the past history, they kind of have averaged between 20 to 40% revenue growth. So I'm using 20 on the conservative side for North America, given that it was such a big growth year in 2020. I don't expect year over year for that to grow that massively moving forward. So 20% average. International, I think, will continue to grow as they are not as saturated in those markets, a little more aggressive rate. So I use 30%. And for India, I used the assumption of in 5 years getting to $100 billion of revenue. Sorry, that's India and Latin America as well, which I didn't dive into. But just looking at that potential $200 billion e-commerce industry in the next 5 years. And I think as Amazon is gaining market share currently at about 30%, if they can grow that to about 50%, I could easily see them getting about $100 billion in revenue in India. So that's where I get that number. AWS, I use a 25% growth rate, just kind of looking at slightly lower than what we've seen in 2020. But again, just kind of erring on the conservative side. That I think could definitely be higher. So 25% growth rate gets us to about 79 billion in 2026. But I could easily see that be 90 billion. So I think that's a conservative estimate. Subscriptions, I use 5% growth because of the high saturation, at least in the US market. And physical stores, A lot can happen there, but I just use a 2% growth rate, quite a modest growth rate. And for pharmacies, I'm thinking with that $1 trillion industry, 10% market share could be $100 billion. I just put an estimate of $80 billion in there, which I think is actually fairly reasonable, given how quickly I think they're going to penetrate into the pharmaceutical market. So that puts us about $744 billion in revenue in 2026, and a growth rate about 32% per year. So it doesn't seem ridiculous based on historicals. I mean, they've averaged between 20 and 40% for the last 5 years. And they've seen one of the higher growth rate years here in 2020. So it's not like they're necessarily slowing down. So I think 32% growth rate, kind of looking at these numbers, I think looks totally reasonable, at least to me. For expenses, I've used pretty much the same margins as what we have currently. I did make a couple reductions. I think they can improve their margins as they continue to grow. Technology and research went to about 10% in 2026. And marketing, I reduced that to about 3.5. So those are some areas I think they could easily trim. And that puts us at a profit margin of 9.21%. And because I like to be a little more on the conservative side, I've actually lowered the PE to 75 from 84. So this is trailing PE, not forward PE. And using that PE, so a little lower of a valuation, that gives us a price of $10,264 in 2026 with a total return over that time of 214% and an average annual return of 25.76%. So obviously, these are massive estimates and it could be massively off, but I find this a really good exercise to go through and put some numbers behind it, digging in a little bit and being able to envision where a company's going over the next 5 years and sort of support my thesis as to why it's a long-term hold. And I think Amazon is still one of those companies you can buy and be pretty confident that it's going to be a market beater over any decent period of time. And I think there's a lot of people right now looking for these like obscure companies that, maybe pre-revenue or whatnot that are maybe just getting into the market. And I think there's a place for speculative stocks. But I think if you're new to the market, I think you need to look for some proven winners, because I think winners tend to just keep on winning. And I think with a company like Amazon, I think there is still a lot of room for large revenue growth for some years to come. You look at the 5-year chart, and it's a 570% return over the last 5 years. Over the last year, look at the 1-year chart. That's 65% return. But if you pare that down to the 6-month chart, you can see it's actually traded pretty much sideways for the last 6 months, while the market, the stock market's done pretty good during that time. So I think we've seen that before with Amazon, where it sort of consolidates for a period of time before its next leg up. And I think it has kind of sat quiet for the last 6 months, and I think is in a good position for the next leg higher here in 2021. So Amazon today trading at a forward PE of about 72 with quarterly revenue growth of about 37%, still represents reasonable value. And I think it's a company that you can buy here, at least in my opinion. Always do your own research, but in my opinion, it's a company you can buy here and hold for the long term. Always keep up on the research. You always got to follow the companies you own. But I think it's a company you could buy here and hold for the long term and have outsized market returns over any decent period of time. Anyways, that's all I got for you today. Thanks for watching. Happy investing.